Financial statement, like I mentioned earlier, is one of the key components for fundamental analysis. So we actually want to make sure company is financially sound. Objective of today's session: know what are financial statements, how to read them, make quantitative assessment, understand the company story, and see if it makes sense. Okay, so number one, let's look at balance sheet first. Snapshot of the current financial condition on a particular date. Okay, so number one, balance sheet is on one particular day one. Okay, so like I said, in a balance sheet, there are these three main components: asset, liabilities, equity. So you can think of it this way: assets are all the items purchased by the company. Okay, so of course from a company perspective, you talk about machines, you talk about plant, you talk about equipment, all the items purchased by the company. So the money purchased have to come from two sources. One is money borrowed to purchase. Okay, then of course some of the money you have to come of your own. Okay, why is it called a balance sheet? Because asset must always be equal to liability plus equity. That's why it's called balance sheet. Okay, so this is how a balance sheet look like. Okay, under the asset column, okay, you would have current and non-current asset. Current, non-current. Okay, non-current means that income producing items or items that will take more than 1 year then can be converted to cash. Okay, the threshold line is always 1 year. The time is always 1 year. Income producing item or other item that take more than 1 year to be converted to cash, that's called non-current asset. Okay, so of course mainly is your property, plant, equipment, those things that you're not meant for sale. You don't need to sell, that's called non-current asset. Current asset, either they are cash, already cash, or item by right within the next 1 year will be converted into cash. That is called current assets. Liability is the same thing. Liabilities, you have current and non-current. Okay, so same thing. Non-current, money that owe have to be paid more than 1 year later. Okay, so of course your borrowings. Current, money owed that pay within next 1 year have to pay back. So of course same thing is the borrowings and of course trade and other payables. Okay, so of course asset minus liability is this thing called equity, which is the net worth of the company. Okay, net worth of company. So equity is made up of two portions: share capital. So basically when the company first started up, how much initial capital was put in. Then after that you have this item called accumulated profit or loss. Okay, next is this thing called the P&L statement, profit and loss statement. So what this one is record the company operating result for the past 1 year. Okay, so this one tracks the performance over the past 1 year period, like your annual appraisal report. P&L statement is your past 1 year. How much you make for the past 1 year. How much you expend on the past 1 year. So this is how a P&L statement will look like if let's say they break down in detail. So number one, you have this thing called the revenue, which is your sales, minus cost of goods sold is equal to gross profit. Revenue minus cost of goods sold, gross profit. So minus sales, general admin expenses. Okay, you get profit from operations or operating profit, or we call it EBITDA, earning before interest, tax, depreciation and amortization. Okay, we got depreciation, we got amortization, you get earning before interest and tax. Minus interest, you get profit before tax. Minus tax, you get profit attributable to shareholders of the company. This is how a P&L statement looks like. Okay, this is how a P&L statement looks like. Of course, it actually don't show everything. So this depreciation, amortization, these are what we call non-cash item. Okay, that means it's an expense, but is there any physical cash being paid out? So as an investor, what is actually most concerned to us is cash, money. The rest is all fake. Because there's actually a lot of non-cash items. Like the other non-cash item is actually this thing called fair value gain. So these are what we call non-cash items.